Retailers are reporting May sales, and nearly 3 out of 5 missed analyst estimates. Gap sales are down 4%. JCPenney, the Limited, and Target also disappointed. But higher-end shops like Saks and Neiman's posted strong results. For more on this, we're joined by Lori Wachs, founder of Crossledge Investments. She's followed consumer-oriented stocks since 1992, and she joins us from Philadelphia. Lori, welcome to Bottom Line. Always good to have you back on.
Pleasure to join you.
Lori, it appeared that through most of the spring, consumers were able to handle those higher gas and food prices. And now we see that stores serving more moderate income consumers, your JCPenney's and your Kohl's, they had disappointing results. Have those higher food and fuel costs finally taken just too big a bite out of consumers' paychecks?
You always have to kind of look at where those tipping points kick in. And actually, as we know, gas prices have come down a little bit the last few weeks, but they were clearly on consumers' minds. If you look at that lower income or moderate income consumer with Kohl's and Penny's plus or minus 1% versus that upper income consumer. There are a few other things that we could point to. The weather wasn't great the first few weeks. There was a very shortened season between Easter and Mother's Day this year. But it really seems, if you look at all of the factors, that gas prices being up 35% year over year has really started to work its way through the economy.
Lori, at first glance, it appears that warehouse clubs like Costco and BJ's had good numbers. But that doesn't tell the whole story, does it?
No, if you look beneath it, I mean, Costco's number looks eye-popping, up 13%, but if you take out gas, they're still up a strong 6%, but it kind of skews the numbers. So if you see analyst numbers putting out that the month was up 6% overall, a lot of monthly reporters have pulled out. They're not reporting every month, like the Walmarts of the world and Abercrombie and Fitch. So they really can disproportionately skew it. And so the numbers probably aren't quite as strong as the numbers that you're seeing. Interestingly, they have done well by consumers going to Costco and BJ's to fill up their tanks with the lowest priced fuel around. So that's really helped the clubs as well.
We were just talking about high-end retailers a moment ago, Saks, Neiman's, Nordstrom, posting strong numbers. Last month, I spoke to Pam Danziger. She's the president of Unity Marketing. She told me the numbers tell us more about how companies are managing their businesses than they do about the spending habits of consumers. How well have these stores adapted to the economic environment?
You know, a year ago, we were hearing a lot about them bringing some more entry price points into their stores. But that seems to have gone by the wayside. They did manage their inventory cautiously over the past year. So customers realized if I want to go and buy it, it's not necessarily going to be there. When it gets marked down, it might not even be there. So there's more of a sense of urgency to shop at these stores. But these numbers have been so strong across the board that you have to think that that consumer is in a better frame of mind. There's more stock market wealth there. Even look at a company like Tiffany's. North American sales up 17% in their last quarter.
A better frame of mind and a better situation financially, no doubt.
Exactly.
Talk to me about what today's numbers mean then for the shopping season and for that back-to-school period starting in August. We should mention also cotton prices are on the rise, and that means that clothes are going to cost more.
And that's really the hot issue that we will see how it plays out over the next few months. Companies have been saying that the real price increases will hit in the back half of the year because that's when their higher cost products have come in terms of the cotton going up that much. They've been saying that they've been testing prices and that the customer's been kind of accepting it. I think given this fragile customer that we're seeing, it's a little hard to believe that, especially other than in the high end, they're going to be able to pass it on. And I think that we will see margin squeezed for a lot of these retailers in the back half of the year. We saw Gap report that a few weeks ago. Same with Aeropostale. So I think there will be more to come here, unfortunately.
And Lori, speaking of more to come, tomorrow that non-farm payrolls number comes out. Does that mean that these numbers are going to get skewed even more?
Well, recent noise there has not sounded that good. There have been, going back over the past 6 months or so, a nice steady improvement there. And clearly that's been something that's worked in the consumer's favor. If this doesn't look that good, we're going to just get that much more nervous than we already are right now. You
know, interestingly enough, because yesterday we were talking about U.S. auto sales, and if you'll allow me, I'm going to try to draw an arc here, because what we're seeing is a lot of the automakers offering discounts and sales, but then commodity prices start to rise, and then they have to pull those discounts back, and whatever little discretionary income people had, now that goes by the wayside as well. Are we seeing some sort of a parallel in what's in what's going on in the apparel sector and in retail?
Right. At the end of the day, you can only push the consumer where there's some elasticity, and when there just isn't that excess cash in the budget, it's nice that your cotton prices are up 15%, but the customer doesn't have that wiggle room, so these corporations are probably going to have to eat it. And just to put things in perspective, for this lower income consumer, gas is about 20% of their overall income spend. So gas being up 30% has really wiped out most of their discretionary spending.
Lori Wachs, founder of Cross Ledge Investments, joining us from Philadelphia. Lori, always a pleasure. Thanks so much.